Hey everybody, Kimosabe here, giving an end of day update. Got a green daily candle close. 4 hour did close on an uptrend, and it is making a leg up that doesn't match any of the legs down. So let's look for opportunities. My thought here is measure the wick that we just made on the daily. Likely to revisit 50% of that wick. 83,800. Take this marker and we'll mark that off. It just so happens to coincide with previous supports. So we will see if 50% of that wick holds. Again, anytime you see the wick, you have the weak buyers and the strong buyers. Strong buyers are down at the bottom of the wick, and the weaker buyers that are likely to get shaken out are at the top 50% of that wick. At least that's the way I look at it. Let's zoom into a 4 hour. Here we are, Bitcoin on the 4 hour. Very nice engulfing candle. It engulfed all previous price action and closed higher than the previous breakdown, the lower high. It's more of an hourly lower high, but for illustrative purposes, it does work. You have a higher high there. So you have a potential for a higher low coming in. Let's take a measurement to see how much higher that higher high is. Right there. We'll project from the closing low. Actually, we're going to project from the wick low because that does line up with where I'm expecting the buy setup to be at 83,800, right at the order block. That is an order block. It's a weaker order block because it didn't take liquidity, but it is an order block nonetheless. So as I said in the last video, get a higher high, expect to try to buy the higher low. That is the discount area where you would find the higher low. Stop loss goes right at the low. I would actually put the stop loss probably at 82,000. Try to buy 83.8, stop loss at 82,000, or look for a very small uptrend to come out of there, or a wick and a bounce back, and then your stop loss will go under that. But expect for like 83.9, 83.8, maybe 83.7 area to be tagged, and then probably bounce up. And I'm kind of expecting this to look like 3 waves up for now. And something very interesting that we can find with the Fibonacci retracements from this high, which was February 21st, the high that was at 98,000, and then you had a downtrend that started. We'll take a Fibonacci retracement from that high to our current lows. And as price ran up for your Trump announcement on Sunday, you had a 786 retrace of that move down. So that retraced the down move up to the 786 Fibonacci retracement. And then you have, after that pump, you can take a Fibonacci retrace of that move up, and price got down to the 786 retrace of there. So expectation is, hey, the pattern's going to keep repeating. You had a down move, so now you just take a Fibonacci retracement from high to low and look for 92,200 maybe, right at that order block up there. That's a 4 hour order block. You should have a reaction there regardless, and that'll fill any wick gap up there, take that liquidity. But that'll be your breakdown point from Monday. So that would be a square up of that. You'll likely get some supply at the 92,000 area around about. That's just my thought for right now. So expectation is for this to look like 3 waves going up. That doesn't necessarily mean that we go down, but just expect it to look like some kind of A, B, C. If it does go, if it does pull down to 80, 83, 84,000 before moving up. Now, if it moves up first, then you would have to look at it like a different kind of ABC. And it would like go up like that, and then expect a 786 retrace of that move up. That would get you back down to 83. So eventually that 83, I think, is likely to get hit at some point. If this price pushes up to 92, I'd see that as a sell setup, most likely to come push back down. Stop loss would go at the 94 Yeah, I'd even put it probably at the 93.5 would be the stop loss on the sell setup, and then expect this to push down. And then there could be your buy setup for another push up for a larger ABC of some sort. But for right now, from that move down, you're at the 50% retrace. You're having some supply come in. Trading closed, New York session closed. And I don't know if you guys noticed, but at 3 o'clock on New York session, 3 p.m., you tend to have the completion of the day's trading. And that seems to happen. That's why I say this whole choppy zone is very day tradey. You'll have the move could start at like 10 or 11 o'clock. This one started at 7 a.m., but the real sell setup came at 11 o'clock to push down. This pushed down all the way till 19 o'clock. So this is a 4-hour chart. So that one was, yeah, that was 3 o'clock. There was your 3 o'clock low, and then it came down and closed lower for the daily. And then you had the reversal here. I think this was 11 o'clock. Yeah, this is your 11 o'clock candle, and then terminated around 3 o'clock. So there's like 4 hours of actual price movement. But they seem to make it very day tradey during those sessions. Asian session and London session don't move as much usually, but New York session tends to have the movement. Sometimes we'll have some London session movement, but for the most part, it seems like the price movements tend to move in New York session, and they tend to stop whatever direction they're going. They tend to stop around 3 o'clock, anywhere from 2:30 to 3:30, from what I'm noticing. So something to be aware of. Here we go, 4-hour candles. We got some nice red candles coming down, so maybe we'll get our buy set up. This wick is also an area to watch for a bounce at 80, almost 85,000 exactly. That may be as low as the market has to come for a square up. But regardless, stop loss goes at the low, probably 82,000. Stop loss at 82,000. Expect another push up, and then take some profits, and then reevaluate the chart. And maybe one of these days we'll get a daily candle close higher high, and then you can have some uptrend going on the daily potentially. So those are my thoughts. That I think we're in a type of range, more reaccumulation. There's your breakdown point, or where supply is likely to come in. Just clearing out this entire move down, just retracing it all, retracing all this. We're getting deep retraces in both directions. So took liquidity, got the push up. This leg up does not match any of those legs on the move down, telling you that this move is definitely complete. Any 4-hour close below here, and I would say we're likely taking out the low, 78,000, and then we'll see. Because anytime that you have a completed move and a bounce, and then it resumes, you're going to do that whole move again at least. So go to the 1-to-1 fib extension. You're going to previous all-time highs at 73,800, and that would complete that move maybe for another bounce, and then probably push back down again. I would see that as pretty problematic to get back down that low if you don't get a bounce straight up to 100,000. But that's more for the macro wave count ideas that I'm having. I'll put out a video later. It'll probably be much later. But, there's just a daily candle close update on what I'm looking at. Somewhere between 83,800 to 92,300. So a nice little $10,000 range to play around in here. So watch for the buys, buy at the lows, sell around the highs of this range. At least take some profits. If it continues going up, then buy the breakout and then see if it pushes up a little more. Just have somewhere where you can manage risk off of. Keep them stops tight so you can have a good night.